All right, so we'll break down price action from today. There were a ton of opportunities and a ton of things to journal and kind of learn from in today's price action. So right off the bat, guys, just understand that everything that we do, we want to first identify what is the current dealing range, right? And remember that a dealing range is defined by um, there being a buy side and a sell side liquidity sweep on both sides, right? And then once we have that range, we observe what lies internally in respects to that range, right? Basically, you have an external liquidity sweep, external sweep, and then we study the what's going on from the internal range perspective, right? Now, price is working between this dealing range high and this low, but ultimately, I would like to say that, or like to think that price is prioritizing this high to this low, right? I think this high here would be used as inducement. We have equal highs here, and then we have a fair value gap, right? And that fair value gap is aligned with optimal trade entry. But we'll worry about that once price gets there. What is more important though is, coming into each week, we need to have some type of premises behind or initial assumption in terms of where that weekly range expansion will be, right? And what I mean by that is, what will that weekly bar look like, from the time that it opens to when it closes, the low to the high, then when it closes. I'm sorry, that was a very bad markup. But anyways, if we understand that where the weekly range expansion is more prone to go in terms of where will the ultimate draw on liquidity be for that week, then we also understand that price is fractal. So if we have that under wraps, then we can say, hey, well, if that be the case, then we understand that where each daily draw on liquidity will be, and which this is highly important, because if we're intraday traders, then everything that we do is based on where the ultimate draw on liquidity will be for that particular day, right? It's kind of like our foundation in terms of how we perceive price. So if we look here, right, previous day's high is taken, right, for each of these days, right? Here's that corrective move, engineers liquidity, that liquidity is taken here, and then we see previous day's high taken all throughout here, right? Here's a corrective move. This move here is only to rebalance the range. Once it's rebalanced, we collect sell side liquidity. What happens? We begin to reprice higher, right? Previous day's high, right? So coming into today, which was Monday's trading, we should have been expecting price to take out previous day's high, right? So now that we have our directional bias or in mind, we trade behind that premises, right? And remember, the foundation of that, once we have that directional bias, then what we want to be saying is, or what we want to be thinking is in terms of the power of three, right? Which is accumulation, manipulation, and distribution, right? So that's basically price engineering liquidity, manipulating the highs or lows of that liquidity pool, and then expanding higher, and then finally reaching the ultimate draw on liquidity, and then we see the distribution by the end of the day. So we'll see how all of that plays out right here in a second. All right, so right away, the opening of the week created a gap, and this is called a vacuum block. And basically, it's treated similar to a fair value gap, but just understand that price needs to trade to and through it, right? So up to it and back through it, and that's exactly what we do here. Also understand that in this case, we're trading indices, and with indices, timing is highly important, right? And so the AM session for indices is 8:30 to 12 noon. And so we key on that 8:30 price, and then ultimately we also want to key on that 9:30 price as well. So understand that right here, once price creates these equal highs, and then we run out the Asian high, I want you guys to see and watch what happens. Let's go to the 5-minute chart. 3 minute. Okay. So as soon as this Asian high is taken, right, and we understand as once the liquidity pool is taken, right, we immediately look for a price to reprice back down to sell side. So once this is taken, right, what we see is this true order block form, right? And then, remember what solidifies this as a true order block is the fact that here's a series of up close candles. There's a fair value gap found inside of the range of this series of candles, right? And what I want to make note of is this is something that I've kind of journaled the past 3 trading sessions. What I've noticed with indices is that once indices move, or once the intention is set behind price, they're gonna move, right? So typically, the reason I'm saying this is because typically, once we see the true order block form, we like to see price, trade through the low of this candle, and then we like to wait for that to get that fair value gap trade right here, right? So if you short term low, short term high, intermediate term high, and then another short term high will form, right? Institutional swing point. Well, when it comes to indices, being that there's a ton of volatility, these things tend to move. So honestly, once you see this, and then you have your fair value gap to the side, you can literally trade, or it's kind of like a sell stop, or you can trade it manually, but you can literally take shorts as soon as price pushes through this particular area. And the reason that this makes sense is because we should understand that 930 price is highly important on the indice, right? So if price is going to reprice higher and attack this previous day's high, it has to come down and collect sell side liquidity, right? So there's where the accumulation, the manipulation happens. So all of this here, so once price trades through this candle, we can take shorts here. Now I didn't participate in these shorts because I was not up and ready to take this trade, but if we look at the timing, right, this move starts at 7:30. The highs are taken right around 8 a.m. and we see around 7:45, and then we see price expand down around 8 a.m. right? Here is your low resistance liquidity built. But what I do want you guys to pay attention to, because I really believe if you study this a lot more, understanding and seeing, right, here's a sell side liquidity pool taken. This happens just before Frankfurt open. But once that sell side liquidity pool is taken, right, you see order flow is established, right? Series of down close candles, up move. Once that high is cleared, this is solidified as a true order block, and then price trades back inside of a fair value gap, right? And then you can literally buy up and attack the Asia high. So once this happens, we'll see price push all the way down to this area here, which was, honestly beautiful. So here's these are equal lows on the lower time frame, 1 minute chart. So price pushes all the way down here, and this is just before the I'm sorry, not that low, this low. This is just before the 9:30 open. Let me back up just a second. Okay, let's come to a 1 minute or 2 minute chart, 1 minute chart. Okay, so price has just dropped down to attack this short-term low right here, right? So here's that if we number, like we do in terms of institutional swing point. Remember, the safest entry comes when price attacks number 3. So that's 1 here, 2, and then this would be 3, and then we see price digging inside of the fair value gap in here, right? So it completely closes in that fair value gap, sweeps this low, and on a 1 minute time frame, we'll see that true order block form, and we'll see price run right through it. So as soon as the high of this candle here is taken, we enter the market, right? So as soon as that high is taken, right, you see it's taken, and then price trades back through it. Right now, even though there's no fair value gap up here, I don't know if there is any on the 30-second time frame. We can check and see. right here. Cool. Series of down close candles, right? Once price pushes up, once it clears that high, look what price does right here. Trades back to the fair value gap. Bingo, right? So now I was not trading this off of the 30-second. I was basically just following the narrative of price that, here's that manipulated or protractionary move down before the 9:30 open. The 9:30 candle is right here. Right. So what I was looking for that was, I wanted to see that 9:30 opening drive price lower, right, and then come back up, right, and it happened, near perfectly. But cancel those shorts out, and we're long from here with stops here, and then we're targeting the previous day's high, right? And there were there's other highs above this that I did hold on to. So we have this high taken and then previous high. Is taken right here, right? So this would be your accumulation, this would be your manipulation, and then once price runs that high, that would be your distribution. Now, here is the second entry that could have been taken. It's on a 15-minute chart. Alright, so here's the dealing range, right? Sweep of the lows, sweep of the highs. This is the current dealing range. And then you have an imbalance here, from here to here, right? Now understand that, it's not always going to be very precise, but here's the imbalance, right? So once price comes near this low, you can literally take entries because this is the true day opening price, and you can see true day open acting as support in here. So buys can be taken from this level, and then you could be attacking. Now we've engineered equal highs, right? So here's calls that's left behind price delivery, and this should be the tipping hat to say, okay, cool, we're going to trade this fair value gap here. Now if you said, hey, it didn't necessarily reach into it all the way, right? And just understand that from broker to broker, price delivery is different. But what I want to show you guys is this here on the 1 minute chart, right? What is this, right? So when this price reaches down, right, they do sweep this low. We didn't sweep this low completely, but we do sweep here, right? Remember, that's up, down, up. So there are stops below here. And then we also sweep this low, right? So if you did not trust it, right, what you should be seeing is a sweep of these relatively equal lows from here to here, right? And then what happens after that sweep? This is your series of candles. This is a very tight fair value gap, right? Once that high is cleared, price trades back inside, and then we shift away, right? So trading it, in this manner would have given you, much tighter stop loss for a much higher risk reward. I didn't participate in these trades. Me and Lennon talked about it on the call, but I didn't participate because I had already, had a pretty decent equity gain from this bullish run here. And I want to say the 30-second provided. Maybe it didn't. Nah, it didn't. So that was that for US 30 today. And then if we come to Euro, where are we? Clear the chart. All right. I think Euro's price action was very important today because same idea. And I'm not gonna go through from a higher time frame with this. I'm just gonna talk about the entries. But we had to understand that we had relatively equal highs here, right? So any down push in price, we have to see that as a manipulated move to be able to draw up to these equal highs, or at least previous day's high, right? So the Euro, and this is the Euro, no, it's pound USD. We can go over the Euro entries really quick. So there were short entries on the euro here because price had taken out previous day's high. Right, so previous day's high swept. Okay. Now, once previous day's high swept, right. So here's that previous day high swept, right? Now you're working between this high, this low and this high, right? This low is ran here, right? It's taken out. And then look what forms here, right? A series of up close candles with the fair value gap inside, and where does price trade back to, right? To this fair value gap, right? Dead spot to, is it right at 50%? Cool, bingo. Right to 50% of this true order block that forms, right? And then there's a high that's even taken on this also, right? So short entries would come here, and then ultimately you'd be attacking. Here's equal lows right here, there, and this entry comes in right at that 7 a.m. New York open, right? So that trade will look like this. You can even come here, or you could have been more conservative above there. And targets would be right at these lows. Now I did think that price would reach lower at first, but once of course we have to respond to price accordingly. So those lows are ran, right? Got a 1 minute chart. Right, this would be the area that we would look for if we were going to take any type of long positions. Okay, all right. This high right here, right? So basically we have a sweep of this liquidity pool over here, right? This sweep happens right at 8 a.m. And then, as of now, there's nothing, if we were to push price to here, let me clear this out you guys' way. If we were to look at price from this standpoint, there's nothing that we could do to flip us from this downside delivery. We get this high created here, so now what we'd be looking for is a true Ferry swing, right? So no Ferry swing just yet. It's not solidified as a Ferry swing until price pierces that high. It doesn't have to close through it, just needs to pierce it, right? Now as soon as we get this, right, look at this displaced move up, right? So price sweeps these lows and then it displaces up. And let's actually look at a 30-second time frame. Right, so same idea. Series of down closed candles. Here's an up move. Here's the fair value gap, and look where price trades to, even on a 30-second time frame. Trades back down inside of the fair value gap, right? Once he clears that high. But if you were not trusting that and you were saying, hey, I'm not taking trades until price clears this high, then here's literally the trade right here. Right, price clears that high, and then here's the fair value gap that's left behind. So your entries, you'd have a pretty decent sized stop, not too bad, maybe 15 pips or so. And then what you'd be attacking is these highs above, right? Price comes back down, and then there's going to be an entry just before 10 a.m. Right, here it is right here. Okay, so we engineer equal lows here, and on a 15-minute chart, understand that news is always used to manipulate price. Maybe not 15. Let's try 10 or 5. Okay, yeah. So on a 5-minute chart, right, we're from this dealing range low to this dealing range high. Here's our imbalance inside of the dealing range from this candle's low to this candle's high, right? And then news is used to run those equal lows. Right, stops will go up on here. And then if you were to use fib extensions, right, understand that we use fib extensions for targets. And you would ultimately take profit here, and you align these fib extensions with significant liquidity pools. But this would be a target, this would be a target, and of course, I'm not going to go through all of this right now because most of us should be able to do that study on our own. But as you can see, price does reach up, and we get a pretty decent expansion higher, for decent profits here. Pound USD is pretty much the same. But what I want to get at on Pound USD is on this hourly chart, right? And understand that all of what I'm showing you guys is because we have to stay in line with the ultimate premises behind price, right? If price is attacking previous day's highs, if it's pushing higher, then we want to stay in line with what price is doing, right? Instead of trying to pick tops and bottoms, right? Because and then doing that, it'll only get us in trouble if we're trying to basically tell the market what we want the market to do, as opposed to just responding to the market and trading with the natural order flow. So what I like about Pound USD, and Pound USD gave a much better picture than Euro today, but on the Pound, right, we had early shorting opportunities. Let's go here. All right, so Pound had taken out previous day's high. Actually, let me mark this on the chart. Okay, so we take out a previous week's high, right? There's previous week's high. All right, and then remember, every time that's taken out, and what we want to do is we want to study price and say, how could we, potentially enter, or does price provide any type of opportunity for entry, right? So here's a short-term high, intermediate-term high, and then here's your series of up-close candles, right? And this is almost turning out to be the better entry model. And what's key is that we have a fair value gap inside, right here, and then we should be taking shorts from here, stops just above here. And then we understand that price is going to seek the this liquidity pool down here, right? So you could target, that low, or even, possibly target that low. Now you don't necessarily know exactly where it's going to run. Initially you would probably think that price will run here, but just understand that when you're shorting in a bullish market, you want to take what's called the lowest hanging fruit. So take what you can and get out, right? Don't try to go for the long run if you're trading counter trend, because eventually counter trend sweeps will become pro trend targets, right? So price trades down into this fair value gap. Just look at it from an hourly chart. Trades down into this fair value gap, sweeps that low here, right? And I'm considering making a video just simply based on building a model around only trading once price enters higher time frame fair value gaps. And then once this happens, and all we're looking for is a reason, or is for price to give us a reason to enter the market, right? So I want to say GU, if I can remember. Just hang on one second. Here, once price clears this candle here, but I don't necessarily see any fair value gaps inside to take entries from. There was something that stood out to us earlier on the call. If I see it, I'll point it out. Okay, cool. It's here. So price dives into the fair value gap. This would be the structural point, right? So with that broken, there's not enough in this leg for me to, take entries from here. So I'm staying out, because what I'd like to see is fair value gaps and imbalances built within this price leg. We don't get that. So then once this high is formed, right, I'm looking to see if price is going to break be below this low. So once we get this, this swing point here, and then price displaces upward, and then we break this high, now this is considered a failure swing, right? So once that is pierced, then what are we looking for? We're looking to trade the fair value gap. Price fills in the fair value gap completely, and then what are we targeting? We're targeting this intraday high. So we're trading here. Stops will go up under that low, or you could even come under the low that created the failed swing. And then ultimately we should be targeting here. Or if we go from here's a short-term low, intermediate, short-term, we could pull our fib from here to here, and price responded. This is 62, so equilibrium is here. And you would use that 27 because there's a liquidity pool to the left of here. And then price should possibly come up to 62, but right away this is 1 to 8, 1 to 9, possibly, if I'm doing math correctly. But anyways, if you missed that entry, right, I'm going to show you guys how you could have gotten into the market even after this expansion here kind of gave itself away. And actually it's right here. No, not yet. Hang on. One minute. Push. All right. Okay. Cool. So here's a true order block form. Right. This is that order flow being established. Right. These entries in here come around. We're getting in that 8:30 window. But anyways, here's that series of down close candles. Then you should see, so here's a series of down close candles. Here's your imbalance in here, and there's also imbalance going to be left here above, I believe. Yeah. So you would trade here. Stops would go under that low, and then for the rest of the day, price does not engage with that particular level, right? We do reach this 27. So you can see we trade back into that fair value gap, back out again, back under that low, and then we go. There we go. All right. So I'm sure that if you guys were to go ahead and do your own study as it relates to the price action in here, you may find other reasons to have entered. Here's a true order block formed. Here's a fair value gap here. So this will be a reason to enter from this order block, right? Series of down close candles. Price expands. Once price clears that high, you could just wait and to enter, at this fair value gap right here. Here it is. But ultimately we reach that 27 extension level, and you see price responds to that right away. Right? So we have accumulation, manipulation. Here's the range expansion, and then distribution once we reach the liquidity pool that price was seeking. So hope you guys learned something from this. We'll be back at it tomorrow. I'm pretty sure it's going to be fire week. So any questions that you guys have, feel free to shoot me a direct message, and then we'll make sure that we answer to it and get you guys the understanding that you deserve. Take care.